Okay guys, Saturday the 28th of October and we are on the S&P 500. So for this week's video there has been a couple of slight changes. There will be a few changes as we move forward, as I sort of perfect what it is that I'm doing now that I'm doing more review videos. So for this week, hopefully the annoying flicker that was on the little box that is recording me, hopefully that should be gone. The actual screen recording itself should be a lot better quality. I've changed the software that I am using. And then the next thing I need to sort out is the audio. There is a slight echo to the audio and I am working on getting that remedied. What I'm also going to do is, for the Saturday videos, rather than have the S&P and the Nasdaq as separate videos, I'm going to group them both together. And then what you can do is, if you only want to watch one of the reviews, you can either watch the S&P or skip along to the Nasdaq. Or if you want to watch them both, you can watch one, pause it, have a break, and then watch the second one. It saves me processing, editing, two videos every single Saturday. Okay, so let's get started on the S&P 500. Now, the first thing you'll notice is one of the trend lines from last week. So what I have done with that is I've just given it a very, very slight adjustment. Last week we had it running up just underneath that pausing price action from sort of the 9th of October all the way up into the 19th. Now, the reason I have adjusted it is because looking at it again, on the 19th of October, with that little spike down, just giving us a clue that it was testing some sort of support down below this level. So all I've done is I have just lowered it ever so slightly. But what you can see is, it's a very, very minor adjustment. The way I trade is I'm always looking for things that may be just slightly out. I'm always looking for the adjustments that need to be made because I'm trading on the lower time frames. And when you're trading on the lower time frames, you want to get as accurate as you can so your entries are good and so you're not taking any bad trades or as few bad trades as possible. So all I've done is I've lowered it ever so slightly. But what you can see is if you're looking at it, from last week we had that sloping support line. You can see the market bounced up, it came back down, it tested at that level, and we still got the bullish bounce from that area. So hopefully you guys managed to capitalize on some of last week's analysis. We went a little bit more in depth. If you did, if you are trading this market, let me know in the comments below. I'm interested to find out how you are approaching the S&P 500, if it's the same sort of people that are trading or if it is different people. Okay, so what I'm also going to do is I am going to put in the upper sloping support and resistance line that we had. So we had it right here. We had it coming through, testing at these levels, and then testing at these areas of price action. Just want to bring it up until it's just touching at these levels. Testing here. And then as we come up, you can see the market spiked up into those levels here. We went over last week in the review video how if we pushed up toward this level, you can see on the Sunday price action, the market just gave that little bit of a press higher, and then into the Monday, once again, a little bit of a press higher on the tail. And then we've seen that rejection coming into the S&P. So again, hopefully you guys were able to use that. So looking at the market now for the week ahead, what are we looking at? Well, the first thing is the market is still within this same area. We've pressed up, we have rejected at these levels. And then once again, we've had a very, very strong bullish movement on Friday. So the first thing to go over is this area up here remains key resistance now. If we do start to poke up higher, we've still got the sloping support and resistance line. So if you've got that on your charts, what you can do is you can sort of follow the market as it moves day to day, and you can see where it is lining up. Now, if we did start to break up above there, again, we're looking for potential clues as to where the market could be going next. And for me, it's really taking into account, I'm just looking for potential clues. For me, that is not lining up properly. We have one here. If we come down, what can we see? We can see the market coming down to retest at this level. We can see it testing at this level. We can see it just about breaking through. We had this strong spike up on the 25th of August. I should also note, guys, that when I'm doing this, I have already looked at the market before I do the video, because if I don't do that, then what I'm going to be doing is just spending, 15, 20, 25 minutes just sort of going, what am I looking at, putting in lines, taking out lines. So what I've already done is, I always give the markets a general a general overview. I look at the sort of key things that I'm going to be looking at for the next week, and then I take you through how it is that I've done that, the key areas that I identified and how I identified those on the S&P. So what is that telling us? Well, it's telling us, first of all, that this level of resistance, if we see it breaking, certainly early next week, then we would also potentially be breaking up above that sloping resistance line. So a pullback to retest, what we would do is we would bring the upper line of this support and resistance, we would bring it up to marry in with that sloping, what would then be support, and it would become a great area to look for potential bullish continuation up into the next sloping resistance line. Now, if we are going to see failures at these levels, because it remains good levels of resistance, when a market is testing all-time highs, it's always worthwhile looking where the market has been rejecting for potential weakness and sell positions, because you get people taking profits, the bulls taking profits, and you always get bears looking to step into the or against the trend. Now, if we did start to make a further move down, we have again that dynamic sloping support line, which would be on your charts, and then we'd be looking into this whole section of price action right here. It's very, very similar to last week. So we have one sitting right here, and then we'd want to just come down into the lows and take those into account. So we'd be looking at the spike down from the 9th of October with a low around about 2540. We have the low sitting right here at 2544 and the low sitting right here at 2544. So in the exact same area for both of these spikes down. When you see something like this also, 244.6, 244 on the daily time frame, very, very close. It's almost the exact same level. So it's a really good indication that you're going to see the market press in the other direction. So you want to just take those into account, 1 and 2. And we want to just come up, looking up above for those levels of support and resistance. One of the subscribers actually a couple of weeks ago emailed me and he said he had been trading the Dow Jones, and the reason he was trading the Dow Jones is because it was at all-time highs, and when it's at all-time highs there's a lot less price action to the left to keep your eye on, and what he means by that is it can be simpler to find your levels of support and resistance, and he's absolutely correct. It's certainly whilst the bullish trend continues, because you don't have to look left. There's nothing to the left. If we start to come back down into, let's just zoom down a little bit, these levels here, and the market is trading at this level, suddenly you have a lot of price action you have to take into account. It becomes a little bit more difficult to start to narrow down your levels. Okay, so in honesty, these are the main levels I am looking at going into next week. We have the key resistance right here. If we start to break up above those levels, very good to look for bullish continuation. If we continue to fail it here, looking for resistance, and certainly a move back down into at least retesting the spike up at 2572, but likely down toward 2568 to 2567. For me, this is a more minor level of support and resistance. You can actually bring it down just a little bit more to 2564. So for me, this one is more minor, support and resistance, unless we were lining up with that sloping support. This is key resistance. Also, if we break up above, key support. This is key support. If we break down below, I'd be happy to look for a move down into 2545. Key support. If we start to break this level, then there's the very real potential that we're looking at a stronger correction on the S&P 500 down into these levels at really 2500. So what you can see is it's always if then this as a trader. I'm not one of the traders that tries to predict markets, because what you find with traders who are predicting markets is they predict 50 markets, 50 different moves, and then they get it right once, and that's the thing that they really push. And that's the thing, unfortunately, that people tend to latch onto. Oh, he got this right. He said this market would go up to whatever level. He must know exactly what he's talking about. It's, there's so much going on in the world in terms of fundamentals There's so much going on in terms of the technicals. It's incredibly difficult to judge a market in the long term. Just look at hedge funds. How many hedge funds are going bankrupt? You always want to let the market tell you. That's why I like day trading, because I can look on the higher time frame. I can get an idea of what's going to happen in the short term, the week ahead. And then during the week, I can also be looking, okay, what's it done today? What's it done the next day? What does that mean coming into the next morning? And then all you're doing is you're using that to give you a trading plan for the day. And very often you can have a very robust trading plan for the day if you are doing it, top-down view of the market. So key resistance, key support if we break up above, key support. If we break down below, we can look for resistance. If we break down below, resistance, and potentially that stronger correction down to 2,500. Right here, more minor support and resistance, but also worthwhile watching on pullbacks if we see them coming into next week. Okay guys, so next video up is the Nasdaq. Okay, now let's have a look at the Nasdaq. So from last week on this market, the main thing we were looking at was this potential, let me just mark this in, this potential price squeeze, looking at the ascending triangle. So we really had it all the way down into these levels. So the market testing at resistance, finding support, making higher lows, the price squeezing in between the resistance and sloping support. We had then potentially seen that breakout. We were looking for a pullback into what would then become support and potential bullish continuation. Now that is exactly what we've seen last week on the Nasdaq. Worthwhile quickly going over this sloping support line. Now, when you're putting in a sloping support line like this, what I tend to find is that you can get a little bit of a clue as to where it should be striking through if you see candles like this. So if you see candles with a small body with relatively large spikes on the candle right next to a stronger bodied candle. So we had the strong bearish candle here. We then had a small body on this candle, the spike up, the spike down. What that's telling me is that the market tried to press up above something and then failed and closed back down below. So if we're looking at a sloping support line like this, that's giving me the clue that if we strike it through this level, the market has been attempting to break through something and failing. So it has to be a small bodied candle, it has to be next to a candle with a stronger body, and it almost always has relatively large tails to at least one side of the candle, at least the side of the candle which is spiking into that previous strong bodied candle. So that's one of the ways I identified it last week, rather than going like this. It didn't really make a difference coming into this pullback because we had the resistance, but if you're looking at just a sloping support and resistance line, it can come in very, very handy. Okay, so last week we had the pullback, we tested at the level, we came up, we looked at previous resistance, broke straight through it on Friday with a very, very strong upward surge. So for the week ahead, well, we are into the all-time highs. There's not a lot to go on at these levels. So usually when we're doing this, all I'm looking at is around about the 50 tags, so 6250, and then the round numbers 6300 as potential resistance. Obviously the round number 6300 being slightly stronger, and that's just purely based off of human psychology. People tend to look at round numbers for areas to find value in markets. So up above 6250, 6300, ideally seeing some sort of price action up there before using those levels. So potentially the market puts in a high on, let's say, Tuesday at 6300 and sees rejection. Then we have the 6300 level, and we have a little bit of proof that it's acted as resistance. If that happens, a little bit happier to look at it for potential weakness. Pullbacks, we obviously still have this key level down toward the previous swings, which is acting as support. We have that sloping support line from the ascending triangle. And then we're looking toward this previous swing point, which as we came back up, it's acted as resistance. We pulled back, we came back up, we failed to react again as resistance. Instead, we broke through. So potentially now we're seeing this area becoming support. You could really bring it down into, let's just have a look. Around about here. So we're around about 6,100. So it's the round number, 6,130 down to around about 6,100. Then we're looking at this previous positive price action right here. Is it lining up with any key levels? Right here. We're using the pause here, the spike down, the break up, we come back down, we retest here. You can see the market opens and closes, but what it does is it closes back up above the level. It then opens on the level, tries to break down, but instead closes up above with a bullish movement, sorry. So again, it's giving us clues that potentially we're seeing some sort of support level right here. So next week, if we do break up into these levels, very likely I will wait for some sort of evidence before I trade against them, especially because the market has just broken out of an ascending triangle. It has made the pullback and it has found the support. You can see very strong movements off of price squeezes like this. Doesn't mean to say it's going to happen on the Nasdaq, but that's why I'm being a little bit more cautious up at these levels. Now, if we see the pullbacks into any of these levels of potential support, I would also be happy to look for those potential bullish positions and the bullish continuation. And it's really if we start breaking down below this level right here that the market would begin to turn a little bit more bearish once again. At present, we're still bullish. The Nasdaq is still hitting those all-time highs. Okay, guys, so that is everything for this week. As always, I hope you found that useful. I hope you all have a great trading week next week. I'm James Orr, and thank you.